Okay, so the next area for our discussion is page number 9. That's it for liability to pay GST. What is it we are going to cover in this particular concept? That is liability to pay GST as to who is liable to pay, whether supplier or recipient. So we have something called as reverse charge mechanism. Whenever recipient is liable to pay GST to government, it is known as reverse charge mechanism, and in the absence of RCM, then it will be FCM. So here we are covering only one section, that is section 9 is our coverage here. Okay, so section 9 subsection 1 says that in case of alcoholic liquor for human consumption, there is no GST, and that is excluded from the ambit of levy. Permanently it is excluded. So the old indirect taxes called as state excise duty, CST and VAT will continue. Whereas 9 subsection 2 says that the petroleum products are temporarily excluded from the ambit of levy, and that is as decided by the GST Council, it will come into the ambit of GST. So until a point of time, the old indirect taxes, that is central excise duty and CST and VAT will continue. And 9 subsection 3, 9 subsection 4, 9 subsection 5 are exceptions to the general rule that supplier is liable to pay GST to government. There are two things, FCM and RCM. In case of FCM, supplier will pay GST to government and recover it from the recipient. Whereas in case of RCM, so recipient only will pay GST to government. So generally supplier should pay GST to government. But in case of 93, 94 and 95, a person other than supplier will be paying GST. So now we are seeing a comparison between 93, 94 and 95. So 9 subsection 3, there are some notified goods and notified services. Okay, and what are notified is only the list of services, and list of goods notified is not in syllabus. Okay, notified goods or notified services. So list of services is notified but not in syllabus. What? Notified goods. Notified goods is not in syllabus. Okay, so you don't have to remember anything with respect to the goods which are notified under RCM. And then who will pay GST in this case? So recipient will pay GST, and supplier can be unregistered person or registered person. That is about 9 subsection 3. Whereas in case of 9 subsection 4, 9 subsection 4 is inward supplies of a promoter or builder from an unregistered person. Inward supply of a promoter or builder from an unregistered person on which promoter or builder is liable to pay GST under RCM. So in this case, there should be like inward supplies by a notified registered person. Who is that notified registered person? Promoter or builder, and from an unregistered person. And who shall pay GST? That recipient, that is promoter or builder. And should the supplier be registered or unregistered? Supplier should be unregistered. Then 9 subsection 5. 9 subsection 5 is applicable in case of supply of notified services through e-commerce operator. So supplier should be different from the e-commerce operator. If supplier owns their own e-commerce platform, that will not be called as supplies through e-commerce operator. So supplier should be different from the e-commerce operator. What are the notified services? There are 3 notified services. HAT, H for housekeeping services. So example for housekeeping services is urban clap or quicker, etc. So in that case, the supplier is the technician and e-commerce operator is urban clap, and the recipient is a household. So therefore in that case, on the transaction, on the entire transaction, liability to pay GST is on e-commerce operator. Same way accommodation services. So supplier is hotel owner and e-commerce operator is GoIPpo, Make My Trip or OYO, etc. And the recipient is the guest. On this transaction of renting of accommodation, so liability to pay GST is on e-commerce operator. And then number 3, T for transportation of passenger service. So by what mode? So transportation of passengers by radio taxi, motor cab, maxi cab or motorcycle. So in case of transportation of passenger service, liability to pay GST is on e-commerce operator. Example, driver is the supplier and Ola or Uber is the e-commerce operator and the passenger is the recipient. On that entire transaction, e-commerce operator will pay GST. And it is important to note that. So HAT you remember, housekeeping service, accommodation service, transportation service. It is important to note that in case of housekeeping services, the supplier should be unregistered. Then only it is notified under 9.5. What if the supplier is registered? It is not notified under 9.5. Then next, in case of accommodation service also, supplier should be unregistered. Then only it is a notified service under 9.5. Suppose if the supplier is not, that is supplier is registered, it is not a notified service under 9.5. Whereas in case of T, transportation of passenger service, so let the supplier be registered or unregistered, always it is a notified service under 9.5. So e-commerce operator only will pay GST. Okay. So that is this. Liability to pay GST is on e-commerce operator. In case of H&A, housekeeping and accommodation, supplier should be unregistered. In case of transportation services, transportation of passenger service, supplier can be registered or unregistered. And what is this transportation service? By radio taxi, motor cab, maxi cab, motorcycle. So Rapido, motorcycle, Rapido is covered. So whether red bus is covered under this? No. So red bus is transportation of passengers by bus. So that is not covered under radio taxi, motor cab, maxi cab, motorcycle. So therefore, so jeeps or tempo travelers up to that only, but bus and all will not be coming. So red bus will not come under the category. And even transportation of goods also, like Link or a lot of other people are there. Okay, so who will provide services through e-commerce operator? So that will not be covered under 9 subsection 5. Only these three are covered under 9 subsection 5. This is the snapshot of 9.3, 9.4 and 9.5. Now we are starting with 9.3. So what is 9.3? There are some notified goods and services on which liability to pay GST is on e-commerce operator. So only services are notified. So there are some notified goods and service for which liability to pay GST is on recipient. Sorry, not the e-commerce operator. Liability to pay GST is on recipient. And this 9.3, we have only notified service in syllabus. Notified goods is not there. What are those notified services? Sir, CG got salads. Sir, CG got salads. That is yes for security lending. Sir, CG got salads. Yes for security lending as per SEBI. So in case of security lending as per SEBI, so borrower of the securities is liable to pay GST. Okay. And I for import of services by a person other than non-taxable recipient. So listen, for security lending services, in case of security lending services, who is the supplier of service? The lender of the securities. And as per SEBI, the lender of the securities will deposit the securities with the stock exchange, and the stock exchange will be giving that securities to one borrower of the securities who need to execute the delivery because you would have entered into short sales, and this lender of the securities will be collecting some lending fee from the borrower of the securities through the stock exchange. On that lending fee, lender will not pay, stock exchange will not pay, but on the entire lending fee, the borrower of the securities is required to pay GST under RCM. So what if a person is covered under RCM and they are unregistered? So if the recipient is covered under RCM and what if they are unregistered? They need to compulsorily get registered. So we have compulsory registration under section 24 RCM. Okay. Then next, I for import of services. Import of services is divided into two. Import of services, OIDR services and other than OIDR services. Import of OIDR services is always taxable. And who will be paying GST? In case of import of services, liability to pay GST is on recipient generally. But when it is OIDR services, we need to see who is importing it. Non-taxable online recipient or other than non-taxable online recipient. If it is imported by non-taxable online recipient, then supplier will pay GST under FCM. If it is imported by other than non-taxable online recipient, recipient will pay GST under RCM. Whereas import of other than OIDR services, so imported by non-taxable recipient or other than non-taxable recipient, like that we have a classification. So to understand this, we need to refer that point which is there in exemptions. Okay, so you please take exemptions. In that exemptions, you refer to that OIDR other than OIDR services. So you can see that in page number 88. You can see that in page number 88, and you give the cross reference there, page number 88. Import of services is divided into two. OIDR services other than OIDR services. OIDR services imported by non-taxable online recipient taxable under FCM. See, OIDR service is always taxable. What is OIDR services? Online information database access and retrieval services. It will always be taxable. But who will pay GST? Depends. If the recipient is non-taxable online recipient, then the recipient will pay GST under RCM. If the recipient is other than non-taxable online recipient, so then if the recipient is non-taxable online recipient, supplier will pay. If the recipient is other than non-taxable online recipient, the recipient will pay GST under RCM. Okay. Suppose that who is non-taxable online recipient? Non-taxable online recipient means any person who is unregistered and importing services for any purpose other than business or commerce. Any purpose other than business or commerce. Other than business or commerce is known as a non-taxable online recipient. So non-taxable online recipient means an unregistered person who is importing services for what purpose? So any unregistered person, individual, HUF, firm, AOP, BY, etc. Any unregistered person importing services for purpose other than business or commerce. So then they will be called as non-taxable online recipient. In case of import by non-taxable online recipient OIDR service, supplier located outside India will pay. Example, Netflix, Amazon Prime, Netflix. So the supplier located outside India only will pay because it is imported by a non-taxable online recipient in India. And what if it is imported by other than non-taxable online recipient? For example, Google Drive services. Google Drive services imported by other than non-taxable recipient, that is a registered person. Then in that case, or unregistered person for business purpose, in that case that recipient only is liable to pay GST under RCM. They need to compulsorily get registered and pay GST under RCM. Then import of other than OIDR service, any other service, normal software development service or health consultancy service, technology, patent, etc. So import of any other services by non-taxable recipient. Who is a non-taxable recipient? Non-taxable recipient is three: individual, trust, government. Individual should be unregistered. Trust can be registered or unregistered. Government can be registered or unregistered. So individual importing service for personal purpose, trust importing service for charitable activities, and government importing services for other than business or commerce. Okay, that is the meaning of non-taxable recipient. So individual, unregistered person importing service for personal purpose, charitable trust under section 12A of the Income Tax Act, whether registered or unregistered under GST. Okay, importing services for charitable activities, and government, registered or unregistered, importing service for other than business or commerce. Let's take an example. So Swami Nityananda Trust is importing video capture device. So that video capture technology will capture all the pilgrims who are coming to meet him. Okay, so this video capture technology is being imported. So import of other than OIDR services by a charitable trust. For what purpose? Charitable activities. What they will do with that video capture? So they will be using for charitable purposes, spiritual purposes they will be using it. Okay, so this will be coming under import of service by a non-taxable recipient, which is exempted. Okay, so because import of other than OIDR service by non-taxable recipient is exempted, and thereafter next we have that is individual importing services. Say for example, let's take this Zoom license. So for taking class in Cisco, WebEx or Zoom, etc. So an individual is importing services for conducting the meetings, etc. So in that case, he should be an unregistered person and using it for personal purpose. Then in that case, that import of service is exempted. Then government importing some video conferencing software. So for the purpose of meeting its people, okay, that is the officers, etc. That is other than business or commerce. So that is also import of services by government for other than business or commerce, which is exempted, non-taxable recipient. So it is exempted. In all other cases, that is import of services other than OIDR by other than non-taxable recipient will be taxable under RCM. So liability to pay GST is on recipient. Okay, so that is with respect to this. Whenever it is covered under RCM, they are compulsorily required to get registered. Okay, even the supplier who is located outside India and making supply of non-taxable online recipient OIDR service, that person is also compulsorily required to get registered. Now, so this is with respect to import of services, and so SIRCG got salads in that. So yes, we have completed, I we have completed. So that I, you refer the page number 88. Refer page number 88. Okay. So then R for renting of motor vehicles. So renting of motor vehicles wherever it is taxable. Renting of motor vehicles, we have few exemptions, but wherever it is taxable, always liability to pay GST is on recipient? No. So there are three conditions. Supplier should be other than body corporate. See, wherever it is taxable, we have few exemptions in case of renting of motor vehicles. So whenever it is taxable, supplier should be other than body corporate, recipient should be body corporate, and the rate of GST charged in the invoice should be 5%. So then liability to pay GST is on recipient. Otherwise, liability to pay GST is on supplier. So some rentings are taxable at 5%, some rentings are taxable at 12, some rentings are taxable at 18. So what we need to see is what is the rate charged in the invoice. If the rate charged in the invoice is 5%, so then definitely liability to pay GST is on the recipient. Supplier should be other than body corporate and recipient should be body corporate. Out of these three conditions, if any one condition is not satisfied, RCM will not come, FCM only will come. Means supplier will pay GST. So SIR, S for security lending, liability to pay GST is on borrower of securities. I for import of service, we discussed that in detail. R for renting of motor vehicles, supplier should be other than body corporate, recipient should be body corporate, and the rate of GST charged in the invoice should be 5%. Then C for copyright services. So in case of copyright services, so what is a copyright service? Temporary transfer of copyrights. What copyrights? So there are total 4 copyrights. Original literary, that is books, novels, etc. Then dramatic, that is story writing, script development, etc. And musical, composing background music, composing songs, playback. And then artistic works, drawings, painting, sculptures, making sets, etc. will be coming under copyright IPR. And only these 4 are covered here. And what about the other IPRs? Other IPRs are not covered here, which means it will not come under RCM. In this also, in case of original literary, there are 2 options. By default, RCM. So liability to pay GST is on publisher. So there is an author who is giving original literary to the publisher. So for which publisher will pay some royalty. On that royalty, publisher will pay GST under RCM. However, there are 2 options. So there is author is registered and opting for FCM. So author should be registered and he can opt for FCM. Means author to pay GST under FCM. So in that case, there is a lock-in for 1 year. So for the next 1 year, from the date when author exercises the option to pay GST under FCM, he only should pay and the publisher will not pay. After 1 year, yes. So they can decide either to continue or to shift the burden to the publisher. Why like that? Because if the author is not paying GST under FCM, they cannot take ITC with respect to their inward supply. So mainly due to that reason. So author has that facility of option, either FCM or RCM. But in case of other 3, dramatic work, musical work and artistic work, so the supplier who is supplying that technology, the supplier who is supplying that IPR, so the recipient only will pay GST and we don't have that option of FCM versus option of RCM. So that is only in case of original literary, and also remember there is a lock-in of 1 year. And now that author should be registered, otherwise this FCM option is not applicable. If the author is unregistered, by default the publisher only will pay GST or the recipient only will pay GST under RCM. That is this. Then G for GTA services. So in case of GTA services, wherever it is taxable, whenever it is taxable. So GTA has 2 options. There are few exemptions applicable to GTA services and in remaining cases it will be taxable. So whenever it is taxable, there are 2 options, FCM versus RCM. If it is FCM, GTA will pay GST and the rate of GST will be 12%. If it is RCM, so the recipient will pay GST under RCM and the rate of GST will be 5%. Okay. And in exam, whenever you come across 12%, which means FCM, whenever you come across 5%, which means it is RCM. Okay. So let's try to understand what are the exemptions with respect to the GTA services. So you can see that in exemptions chapter, GTA services. So page number 87. Page number 87. GTA services. Following are exempted. What are the exemption? Total 5 exemptions are there. Number 1. So transportation of specified goods. There are some specified goods here. That is agricultural produce, food grains including flours, pulses, milk and salt, and number 3 organic manure. Related to food, 3 agricultural produce, food grains including flours and pulses, milk and salt, then organic manure, then newspapers and magazines, then relief material for natural or man-made disaster, defense equipment and material. So these are the 6 specified goods. If transported through GTA, goods transport agency, then the freight collected will be exempted. Who is a goods transport agency? The one who transports goods by road and issues a consignment note by whatever name called is known as a goods transport agency. And then second, suppose if the freight is collected for transporting goods in a single carriage. So we are transporting goods belonging to a person in a single carriage, and carriage wise we collected the fees. When we will collect the carriage wise rent or carriage wise freight? Only when goods belonging to the person is transported in a single carriage, then carriage wise freight will be collected. In that case, if per carriage the freight does not exceed 1500, it is exempted. If the freight exceeds 1500, it will be taxable. So this is for the small carriages. So that point is given. So in small carriages the goods will be transported and the freight charge does not exceed 1500, exempted. If it is going beyond 1500, it will be taxable. When goods belonging to multiple people are transported, we will not collect the freight per carriage. We will collect the freight so per consignee. Okay. So in that case, so freight does not exceed 750. Consignment transported for a single consignee, that is each consignee we will be transporting, or each consignment wise we will be collecting. So when the freight does not exceed 750, so then it will be exempted. So why they gave consignment transported for a single consignee, which means that in that vehicle we are transporting goods belonging to multiple consignors to multiple consignees. So consignee wise we are seeing what is the freight. So freight does not exceed 750 rupees, then it will be exempted, otherwise it will be taxable. And next, fourth exemption, that is if the recipient is registered only to deduct TDS under section 51, they are not having outward supply. So generally central government or state government department, public sector undertaking, or a government body or a local authority is liable to deduct TDS. They don't have any outward supply, they have registered only to deduct TDS, and if they receive any GTA services, that is exempted. Then last case, if the GTA service are provided to a person, that is unregistered individual or HUF or AJP, not having a factory, so then also it is exempted. What if service are provided, GTA service are provided to a firm which is unregistered, taxable? And what if the service are provided to unregistered company, then also it is taxable. So recipient is individual, HUF, AJP, all are unregistered and not having factory, then it is exempted. So these are the 5 cases which is exempted with respect to GTA services. Apart from these 5 cases, all other cases it will be taxable. So who will pay GST? Depends. So if GTA opts to pay GST under FCM, they will pay. Otherwise, recipient will pay GST under RCM. What if recipient is unregistered? All cases same. So if the recipient is unregistered, they need to compulsorily get registered to pay GST. Okay. So that is with respect to GTA services here. Okay. So Sir CG we completed. That is S for security lending, I for import of services, R for renting of motor vehicles, and another C copyright services, G for GTA services. Remember, in the question, if 12%, if you see GTA is paying GST under FCM. If you see 5%, so RCM, that is recipient, is liable to pay GST under RCM. Okay. And then next GOT. Okay. So you give this page number reference over there. So page number 87. Page number 87. Okay. Page number 87. So this is with respect to this GTA services. Refer page number 87. Refer page number 87. And then next GOT. G for government services. So government services to business entities are taxable. Okay. Wherever government services to business entities are taxable, in that case we need to see whether it is renting of immovable property or other than renting of immovable property. So wherever it is taxable, liability to pay GST is on recipient. Okay. So here we have one classification. If the service is renting of immobile property, the recipient is registered, recipient will pay, otherwise government will pay. For any other service, if the government is providing service to business entity only will pay GST under RCM. Only in case of renting of immobile property, if the recipient is registered, recipient will pay, otherwise supplier will pay. Whereas in case of any other service provided by government to business entity, so recipient, that is business entity only, will pay GST under RCM. That is in case of this G, government services. And next O for overseeing committee to RBI. There is a overseeing committee which will restructure the NPAs. They will be providing services to RBI. On that services, liability to pay GST is on RBI, commission. So overseeing committee will restructure the NPAs, provide the services to RBI, for which RBI will pay commission. On that commission, RBI will pay GST under RCM. Then T for transfer of right to use. So transfer of right to use land, that is FSI, floor space index. I have some floor space index. What is floor space index? That is how much construction I can make on this land is known as floor space index. Already some land I have, like for example, the FSI permitted is 2 and I have a square feet of 2400. So 4800 square feet of construction I can make, but I used only 3000 square feet. So still 1800 square feet is possible. That I will transfer to a builder, for which I will get consideration. On that consideration, builder only will pay GST under RCM. Then again, number 2, transferable development rights. So whenever I have a property, that property is taken on compulsory acquisition by government. Now towards that compulsory acquisition, they will be giving me TDR, transferable development right. That transferable development right, I will be selling to a builder who wanted to enhance their construction beyond FSI. So now a builder will be purchasing the TDR from me, for which I will be giving my consideration. On that consideration, the builder only will pay GST under RCM. Then in case of long-term lease of land is for a period more than or equal to 30 years. So when I am giving a land on lease for 30 years or more, on that land the builder will be constructing some complexes and he will be giving it on rent. And therefore this person will be giving me lease rental. On that lease rental, liability to pay GST is on the builder or promoter but not on the landowner. So in these 3 cases, TDR, FSI and long-term lease, liability to pay GST is on the promoter or builder under RCM. That is this. Okay. Development rates or floor space index for construction of project, long-term lease of land 30 years or more. So we have completed up to this, that is Sir, CG, got. Now we are starting with salads. S for sponsorship services. So what is a sponsorship service? In case of sponsorship service, the one who organizes the event is the supplier of service. So they are allowing the other person to display their name, for which the sponsorer, that is the recipient of service, is the sponsorer who will be paying some money. So in that case, we need to check whether the recipient, that is the sponsorer, is a body, corporate or firm. If the sponsorer is a body, corporate or firm, then it will be taxable under RCM. Firm includes LLP. And if the sponsorer is other than body, corporate or firm, then it will be taxable under FCM. And this is applicable apart from the exemptions. If there is any exemption, no need to pay GST. Whenever it is taxable, then only it will be applicable. Okay. So that is this part, and you can see that in S, sponsorship services. So in case of sponsorship services, remember when it will come under RCM, only when the recipient is body, corporate or firm. Then A for agent services. So A for agent services, we have 5 agents who are covered under RCM. There is an insurance agent who is providing services to an insurance company, where liability to pay GST is on insurance company on the commission which the insurance agent is getting. And this insurance agent do not include business correspondent or business facilitator of the insurance company. That is a doubt which many students have asked me in FAQ. That is whether this insurance agent includes business correspondent and facilitator working for an insurance company. No. So this insurance agent is different from business facilitator and business correspondent working for insurance company, because we have an exemption in this context that business correspondent or business facilitator working for an insurance company in rural area, whatever commission that they get will be exempted, but that is not applicable in case of an insurance agent. So insurance agent to insurance company, it is coming under RCM, where insurance company will pay GST under RCM. And then second agent is recovery agent of a bank or financial institution. So for a bank or financial institution or an NBFC, there will be a recovery agent who will recover the outstanding or overdue loans, and for which the commission will be paid to him. And on that commission, he will not pay GST, but the recipient, that is bank, financial institution or NBFC, will pay. That is the second one. And third, direct selling agent. But direct selling agent other than body corporate or firm includes LLP, will only come under RCM. That is, if there is a direct selling agent, they will be trying to do the marketing of the banking products, and for which, if the supplier is body corporate or firm includes LLP, so then in that case they will only pay GST under FCM, RCM will not come. So when RCM will come? Only when the recipient, that is when the supplier is other than body corporate or firm, then the recipient is the banking company, so banking company will pay GST. So in case of direct selling agent, but remember, direct selling agent other than body corporate or firm is only covered under RCM. So what is the difference between direct selling agent and recovery agent? Recovery agent will be just recovering the overdue loans, whereas direct selling agent are the marketing people who try to sell the banking products. Whereas business facilitator to a banking company. So when there is a business facilitator who is providing services to a banking company, who is a business facilitator? So whenever bank is not having operations in certain place, under the financial inclusion scheme of government, they will be appointing some people called as business facilitators, and these business facilitators will be working for the bank, and whenever they get a commission for providing the services to the banking company, on that the banking company will pay GST under RCM, business facilitator will not pay GST. Okay, it is the banking company which will pay GST. Whereas the another point is agent of business correspondent to business correspondent for a banking company. So there is a business correspondent who will be working for a banking company. The difference between business facilitator and correspondent is that facilitators like widespread agents who will be just carrying out the money remittances activities, whereas business correspondent will do all kind of banking operations, like how a branch will work, the business correspondent will be working, and they will also be commission agents. So they are all not called as employees of the bank, only thing they will be representing the bank. So this business correspondent, so whenever providing service to the bank, that is not covered under RCM, because only business facilitator to bank is covered under RCM, but business correspondent to bank is not covered under RCM. So then it is FCM only. But what is covered under RCM is business correspondent will appoint an agent, and that agent provides services to business correspondent, for which business correspondent will pay commission, and that commission paid by the business correspondent is taxable under RCM in the hands of the business correspondent. Whereas here we have some exemption also in this context. So what is that exemption? So services provided by business correspondent or business facilitator, agent of business correspondent or agent of business facilitator to a banking company in rural area. So with respect to accounts in rural area branch, so then in that case whatever commission that they are getting will be exempted. Whereas if they are working for an urban area, then it will be taxable. Thereafter it depends whether it will be FCM or RCM. So this point number 4 and 5 I am elaborating little bit. Okay, so this point 4 and 5 just little bit elaboration I am just giving you. So have a look into this. So what is that? I told you that there will be a business facilitator and a business correspondent. 1 second. One second here. So pen is not working. Yes. So there is a business facilitator. So first there is a banking company, and this banking company is having urban area branch and rural area branch. So whenever urban area branch and rural area branch, okay, so they will be appointing people for both. Okay, so now they have appointed some business facilitators, okay, so business facilitator, say Mr. A is appointed as business facilitator for urban area branch and Mr. B is appointed as business facilitator for rural area branch. Now A will be providing services to the urban area branch, and for that services provided by A, so A will be receiving some commission, and this commission is taxable or exempted. Definitely it will be taxable. So this commission will be taxable, but it will be taxable under RCM. So which means that on that commission, who will pay GST? The banking company will pay GST. Same way Mr. B is there. Mr. B renders some services to the rural area branch, for which the rural area branch will be paying some commission to B. So that commission which is received by B is exempted, because whenever there is a business facilitator who is working for a banking company in rural area, that is exempted. So on this commission, in this case, who will pay GST? So on this commission, liability to pay GST is on the banking company. So it is not payable by the business facilitator. Then next, so these business facilitators will be having agent. So agent of business facilitator. So this agent of business facilitator, say Mr. X and Mr. Y. So Mr. X is appointed as an agent of Mr. A, and Mr. Y is appointed as an agent of Mr. B. Now whenever X provides services to A, X provides services to A, for which A will be giving some commission. So whatever commission that A gets, he will be sharing some commission with Mr. X. So whether that commission will be taxable? Yes, that commission will be taxable. Whether it will be taxable under FCM or RCM, it will be taxable under FCM only. We don't have RCM. Only business facilitator to banking company is covered under RCM, but not agent of business facilitator to business facilitator. Then on this commission, who will be paying GST? So agent of business facilitator only will pay GST. What about services provided by Mr. Y to Mr. B, for which Mr. B will pay some commission? As the main commission is exempted, even this sub-agent's commission is also exempted, and it will not be chargeable to any GST. So therefore, business facilitator or agent of business facilitator working for rural area branch of a banking company, commission received is exempted. Whereas if Mr. A and X who are working for the urban area branch, that will be taxable. Business facilitator to banking company RCM, agent of business facilitator to business facilitator, it will be FCM. And whether the business facilitator will pay any GST? No, business facilitator will not pay 1 rupee GST also. So this is with respect to business facilitator services. What will be the position if this is in case of business correspondent? So exactly this situation will change if it is a business correspondent, because business correspondent also the same exemption is available, but the taxability there is a different point. Okay, so let's try to understand that. So now there is a banking company, instead of business facilitator we will take business correspondent. So business correspondent to banking company or agent of business correspondent to business correspondent working for rural area operations is exempted, no doubt about that. Whereas in case of urban area, it will be taxable, but who will pay GST? So that differs. So wherever here FCM comes, that is RCM. Wherever RCM comes, that will be FCM. So exactly opposite. So it changes. So here it will be FCM, which means on that commission, whatever business correspondent received from a banking company, the liability to pay GST is on the business correspondent only, so not on the banking company. Here we don't have RCM. Same way, whenever agent receives some commission from the business correspondent, on that commission it will be taxable under RCM. Then liability to pay GST is on the business correspondent, but not on the agent of business correspondent, because it is covered under RCM. So the main difference between these two is that with respect to rural area branch, it is always exempted, let it be business facilitator or business correspondent. The only place where there is a difference is that, so in case of business facilitator, he will never pay GST on his inward supply and outward supply, whereas his inward supply is what received from an agent, his outward supply is to a bank, he will never pay GST. Whereas in case of business correspondent, on his inward supply and outward supply, he will only be paying GST. So that is the conclusion which you need to remember. So I have discussed this along with the exemption related to business correspondent and business facilitator. Okay, next, so we have L. L refers to legal service. So 5 agents we have completed. Then L refers to legal services, that is services provided by an advocate to a business entity. So individual advocate or form of advocate to a business entity. We have few exemptions, and wherever it is taxable, liability to pay GST is on the business entity. In case of advocate services, let it be individual advocate or firm of advocates. And then same way arbitrator. The difference between advocate and arbitrator is that advocate settle the dispute through the court of law, and arbitrator settle the dispute out of the court. And this arbitrator service to business entity is also covered under RCM, where liability to pay GST is on the recipient, that is business entity. And in case of advocate services and arbitrator services, we have certain exemptions. So wherever it is taxable, in that case only RCM will be applicable. Then director services to body corporate. Yes, A, L, A we have seen, and D, that is director services. So whenever there is a director who is providing services to a company or body corporate, whatever money that is being paid by the company or body corporate, we have a latest CBIC circular which says that. So whether that part of money which is paid by the company to the director will be deductible for TDS under Income Tax Act under section 192 or 194J, we need to know. So if it is deductible under 192, so which means that whatever money that the director is getting will be taxable in the hands of director and under the head salaries. So in that case, the director is not required to pay any GST, because employee to employer in the course of employment is excluded from supplying. Whereas if at all the company is making some payment which is chargeable to TDS under Income Tax section 194, so then in that case whatever money that the director is receiving will not be taxable in the hands of director as salaries, but it will be taxable in the hands of director as PGBP or IFOS. So due to that reason, whatever money that is received from the company will be chargeable to GST. On that, the company has to pay GST under RCM. So even they have linked it with the Companies Act also, that is contract of service and contract for service. So if they are managing director or whole-time director etc., and their contract with the company is of service, then whatever money that is payable to the director will be coming under salary, employer-employee relationship. Suppose if it is for contract for service, then whatever money that is payable to the director will be coming under 194J, professional services, and on which liability to pay GST arises, and it will be on the company or body corporate under RCM. Director will not pay. What if director is not providing the service in the capacity as a director, but in the capacity as a resource person or a professional? And in that case, whatever service that is provided not in the capacity as a director, so that will be taxable in the hands of that person only, because he is not a director for this particular services. That is this. And next, yes, last point, it's in that, yes, security services. So whenever security services is not don't get confused with respect to security lending scheme. So this security service is security agency service, that is manpower supply service. There are some manpower supply agencies who will be providing the security personnel. So whenever they provide the security personnel, liability to pay GST is on the recipient, provided the supplier, that is the security agency, is other than body corporate, and the recipient should be registered. So recipient can be body corporate or other than body corporate, that is not a condition, but the recipient should be registered, that is the only condition. What if the recipient is registered and opting for composition scheme? Then in that case recipient will not pay, but the supplier only will pay. What if the recipient is registered and they have registered only to deduct TDS under section 51, so they don't have any outward supply? In that case also they will not pay GST, supplier only will pay GST. So when security agency service will come, the supplier should be other than body corporate. What if they are body corporate? Don't see who is recipient, always it will be FCM. Supplier should be other than body corporate. What if the recipient is unregistered? Then also FCM. Supplier is other than body corporate. The recipient is registered and opting for composition scheme, then also FCM. Supplier is registered. Supplier is other than body corporate, recipient is registered but registered only to deduct TDS under section 51. So then also it will be FCM. And only when the recipient is registered and not opting for composition scheme or not registered only to deduct TDS, then only it will be RCM. So these are the list of services which are covered under RCM. So what is that you need to do is that, so quickly you need to run through your mind that whether it is covered under RCM or not. So because many number of students will be making mistake in these places. So when there is no RCM, they will be unnecessarily applying RCM. When there is RCM, they will not apply that RCM, because of which the total tax liability computation will differ. If at all you are solving a first question, that is descriptive question, 14 marks question, if they are not touching RCM related related points, return the question paper and tell that it is not indirect tax exam, some other exam you have come. So that much important it is. So therefore definitely this will be tested in exam. So what you need to know is that that's the reason why I gave you a mnemonic. So Sir CG got salad. So this list you need to remember. So whenever you see a particular transaction, so once you decide that it is taxable, and then once you decide that it is a supply, and then you need to know whether it is taxable or exempted, and you know that it is taxable, then who will pay GST? So is it FCM or RCM? Just run through. Is it covered under RCM anywhere in Sir CG got salads? Yes. Then recipient will pay. So don't include it in the tax liability of the supplier. So only thing mentioned that the recipient is liable to pay GST under RCM. So don't include it in the value. So when you are doing the computation, suppose if it is not covered under RCM, balancing figure is FCM. So supplier only will pay GST under forward charge mechanism. Is it clear? So this is what you need to apply. Okay. So any doubt in this so far what we have seen? RCM, notified services. No. Thank you. And now we are moving on to section 9 subsection 4. Guys, you attended already the classes or what? How you are not getting doubts? I am not explaining that crystal clear. I am going like a running express, super fast express. How you are able to not get the doubts? Then already you completed the entire revision and you are attending the classes. So great. So nice to hear. So how there is no doubts here? Fine. So section 9 subsection 4 we are discussing, that is inward supplies of a person from an unregistered person. So initially when this 9 subsection 4 came, there was like lot of people who are covered into this, but at a later point of time they abolished this 9 subsection 4, and now again 9 subsection 4 is notified only for one transaction. What is that one transaction for which 9 subsection 4 is applicable? So there is a promoter or builder. That promoter or builder is making inward supply from an unregistered person. So when promoter or builder is making inward supply from an unregistered person, so on which the promoter or builder is liable to pay GST under RCM. So why they have brought this point? Because the promoter or builder is now taxable at the rate of 1.5% and 7.5%. So to those promoter and builder only this will be applicable. Suppose if the promoter or builder on sale of commercial complex etc. is not paying tax at 1.5% or 7.5%, this 9 subsection 4 is not at all applicable. So therefore the outward supply of a promoter or builder depends. If it is a residential real estate project, it will be 1.5%, 7.5%. So 1.5% in case of affordable housing. So what is affordable housing is not required, but I am just giving you an idea. Affordable housing means, so usually the square feet of that house does not exceed, so 600 square feet approximately and 900 square feet approximately. So 600 square feet in case of metros and 900 square feet in case of other than metros. And this does not exceed the amount of 45 lakhs consideration. So then it will be called as an affordable housing. So with respect to affordable housing, the rate of GST will be 1.5%. So but in some place it will be given as 1%. What is that? So generally there is 1/3 reduction towards the value of the land. So 1/3 reduction towards the value of the land is there. So when there is 1/3 reduction towards the value of the land, when the flat price is including the UDS, so in that case we need to reduce 1/3, correct? So rather than reducing 1/3 from the flat price, so what they are doing, they will be reducing the 1/3 from 1.5%. So consequently the rate of GST will be 1%. So that's how some books will be there, but you can follow anything. So either you reduce it from the value or you reduce it from the tax, but don't reduce it from the both. So then it will be a big disaster. Okay, so therefore 1.5%, 7.5% is the rate of GST. So that rate we need to apply on the value of the land minus 1/3, so value of flat minus 1/3 towards value of land. And all this discussion, this 1/3 reduction, 1.5%, 7.5%, it is applicable only in case of residential real estate projects. So what about the commercial complexes, roads, bridges, tunnels, etc.? So in that case, first of all, so that will be that will be taxable at a rate of 12% or 18%, and there is no restriction of without IDT. And in that place, don't apply section 9 subsection 4. So first of all, section 9 subsection 4 is applicable in case of a residential projects, basically where the tax rate is 1.5% or 7.5%. And so why this inward supply they need to pay GST under RCM? Because So they are liable to pay tax at 1.5%, 7.5% without ITC, which means that when they pay GST at the rate of 1.5, 7.5, they cannot take ITC on their inward supply. So they will plan to purchase it from an unregistered person. So if they start purchasing from unregistered person, then there is no GST burden on them, then it is a loss of revenue to the government. So what government is telling that if they are making purchases from a unregistered person, they need to pay GST under RCM, which means it is as good as purchases from a registered person. So therefore there will be some tax revenue to the government, and there is a relaxation that is being provided because practically it is not possible to purchase or receive everything from a registered person. So in case of inputs and input services which are purchased or received by the promoter or builder, they gave a relief of 20%. So 20% of the total inward supply in a particular financial year can be from an unregistered person, that is okay. But beyond that, if they are making purchases from an unregistered person, on that they need to pay GST under RCM, okay. And now, while discussing this, they have excluded a few goods. So into this, so these goods definitely cannot be purchased from a registered person. So that's why it is excluded. For example, so you take electricity. Electricity is exempted. So therefore, first of all, there is no GST, and the supplier will be definitely an unregistered person. So like that, electricity, petrol, diesel, then natural gas, like that some goods are excluded. Electricity, high speed diesel, motor spirit, and natural gas. You can see that in the first box, okay. So inputs excluding high speed diesel oil, that is diesel, motor spirit, that is petrol, and natural gas, and electricity will be excluded. So these goods they can make purchases from a unregistered person, it is okay, it is permitted. And remaining inputs and input service, in input service also TDR, FSI and long term lease is excluded. Why? Because anyhow, yes,
electricity from an unregistered person.
Electricity is default from an unregistered person. Electricity is
from the government's.
Come again.
Is it not from the electricity board or the state-run institutions?
That is exempted, no? Electricity is exempted, no? So why they will be registered?
Okay.
So electricity is generally exempted. So why they will register? Maybe they may get registered if they are doing other activities also. So but whenever they receive electricity, we don't have to bother about whether it is received from a registered person or unregistered person. So that's why they have excluded it. Okay. Then next, in case of input services, why TDR, FSI and long term lease is excluded? Because in case of TDR, FSI and long term lease, liability to pay GST is on the recipient anyhow under RCM. So what's the point in again specifying it under 9 subsection 4, which is already covered under 9 subsection 3. So that's the reason why that is also excluded from input services. So now these inputs and input service, for the discussion I am discussing it separately, but logically speaking when you do the computation you need to do it together. So no need to treat like inputs and input services separately for computation. So when you do the computation you need to do it together. So first let's take inputs. So these inputs purchased from a registered person. How much? More than 80% in a financial year. So this calculation will not be done on a monthly basis. This calculation will be done on a yearly basis. So that's what they have given it in the notification. So it is not required to be done on a monthly basis. So on a yearly basis we need to do. So throughout the year we need to take what is the total inputs and input services cost. Say the total inputs and input service cost for a particular project. And also this should be computed project wise. So for a particular project is somewhere say 80 crores. Out of this 80 crores, so 80%, that is 64 crores worth of inputs and input services other than the excluded things should have been purchased or received from a registered person. Okay. Say they purchased more than 80%. So more than 64 crores they have purchased or received from a registered person. So now this provision will not get attracted. However, if there is a cement in the remaining, for example, so out of 80 crores they have made purchases or inward supplies from registered person to the extent of 65 crores. So more than 80%. So remaining 50 crores is less than 20%. So still In that 15 crores, we need to check whether cement is there, because cement should always be purchased from a registered person. That's a condition. So in that 15 crores, if cement is there, on that cement, definitely they need to pay GST under RCM. So it is always advisable to purchase cement from a registered person so that the 20% benefit can be enjoyed. Otherwise, what will happen? Anyhow, on cement, we need to pay GST under RCM if purchased from an unregistered person. So therefore, there is no benefit of the 20% in that case. Then what if there is a shortfall? So see, the first thing that is what I was referring to. So purchase from a registered person greater than 80%, in our example 65 crores, and remaining 15 crores, so balance from unregistered person. So only if cement is there in that 15 crores, we need to pay GST under RCM 9 subsection 4. At what rate? At 28%, because the applicable rate of GST on cement is 28%. So rather than purchasing it from a registered person, if you buy from unregistered person, in both the cases the rate should not change. If you buy from registered person also, he will charge 28%, and when you buy from an unregistered person, anyhow you need to pay GST at the rate of 28% under RCM. So effectively the burden will be 28%. So that's the reason why they gave it. And suppose if it is any other goods apart from cement is being purchased, you don't have to pay any GST under RCM. Okay, because already you achieved 80% of the condition, so that 20% benefit you can enjoy. Whereas if purchase from a registered person is less than 80%, see the next branch. So if purchase from a registered person is less than 80%, say 60 crores is only purchased. Now what is the shortfall up to 80%? 4 crores. So that 4 crores worth of inward supplies, so you need to pay GST at the rate of 18%. If it is cement, pay in that 4 crores if cement is there. In that 4 crores if cement is there, you pay GST on cement at the rate of 28%. In that 4 crores if other goods are there, other goods and services are there, you pay GST at the rate of 18%. And now you crossed 64, so still there is some 16 crores. In that 16 crores, check cement is there. So yes, cement is there, then you need to pay GST at the rate of 28%. If it is other goods, you don't have to pay any GST because you already achieved 80% condition. Whereas if it is input services, we don't have cement and all input service, so very simple. So received input services from a registered person greater than 80, leave it. You don't have to pay any GST under RCM. Suppose you purchased or received input services from a registered person less than 80%. So then in that case, whatever balance you purchase from unregistered person, on that you pay GST at the rate of 18%. So for cement alone, we have the special provision that even if you have met 80% condition, so still on cement you need to pay GST under RCM. So whenever you pay GST under RCM, you are achieving the 80% condition. For example, you achieved only 60%. So remaining 20% you paid GST under RCM. Then you achieved 80%. So thereafter you don't have to pay any GST under RCM. That is that in case of inputs and input services. Whereas in case of capital goods, so we need to check from whom the capital goods is purchased. If the capital goods is purchased from a registered person, no problem. If the capital goods are purchased from unregistered person, we don't have this 80%, 20% and all for capital goods. Always the capital goods should be purchased from registered person, otherwise pay GST under RCM at the rate applicable to the capital goods. Not 28% or 18% general rate, but the rate applicable to the capital goods will be taken. Okay. GST payable under RCM at the applicable rates. So this is with respect to the section 9 subsection 4. So long time awaiting. So I was discussing this from 2019 onwards. November 2019 onwards I was discussing this. So they did not ask this for November 2019. Then May 20 did not happen. November 20 they did not ask. Again Jan 21 they did not ask. So July also no. But definitely I am expecting a very good question that can be framed on this. So what is that you need to do when you get a question related to this? So first you need to take capital goods. So capital goods always you need to purchase from a registered person. And if capital goods, so step 1 is computation related to capital goods. Capital goods should always be purchased from a registered person. If at all the capital goods are purchased from an unregistered person, so in that case you need to pay GST at the rate applicable to the capital goods, and that is over under RCM 9 subsection 4. And thereafter you need to take the sum of inputs and input services. So that sum of inputs and input services, if it does not exceed 80%, so you need to see the shortfall. If it does not exceed 80% purchased from a registered person, so on that shortfall you need to pay GST at the rate of 28 or 18 depending upon which product it is. And if it is beyond that, If you don't have any cement, then leave it. So you don't have to pay any GST under RCM. So this is how you need to arrive at. So GST payable under RCM. Okay. This is the concept. And I am going to discuss one question related to this. This section 9 subsection 4, how a question can come. Okay. So this question I have not given in the practice manual, but this question I wanted to discuss, which I gave in my revised book. Okay, I want to discuss it from there, so just give me 1 sec. I'll just open it.
So small doubt, sir.
Yes, ma.
The cement is taxable at the flat 98%, be it the input services are purchased from registered or unregistered. Whatever comes in the question, if cement is given,
See, cement, if it is already purchased from a registered person, why you pay GST under RCM? So cement is purchased from unregistered person, means you have not yet paid GST because the supplier is unregistered. So therefore you need to pay GST at the rate of 28%. So don't see 80% condition in that case. Is that your question?
Yes.
That is only your question, na? Hello?
Yes, sir.
Okay. So now, say this. So this question I will just share with you. Okay. So have a look into this question into the screen. Hope you can see this. Hope it is visible to all of you. There is a promoter who has procured following goods and services for construction of a residential real estate project during a financial year. Name of the input services, input goods and services. So we have lot of details. And rate, what is its rate, and what is the value of inward supplies, and whether received from a registered person or unregistered person. In that manpower supply service alone, we don't have any information as to whether it is from a registered person or unregistered person. So there are two different cases. What if manpower supply service is received from a registered person, and what if manpower supply service is received from an unregistered person? So now if the manpower supply service is received from a registered person, let's see what will happen. Okay, assuming that the manpower supply is from a registered person. Now, so whenever you get a question like this in exam, the first thing that you need to do is that there are certain inward supplies which are not covered under 9 subsection 4. Identify those inward supplies and eliminate it. So here if you see sand, cement, steel, bricks, flooring tiles, paints, architect, manpower supply, aluminium, windows, concrete mixer, electricity. Electricity will not come under 9 subsection 5. And in case of electricity, so 9 subsection 4 we don't have to apply in case of electricity. So therefore no need to bother about electricity into the discussion. So no need to bother about electricity. So leave it. And FSA also will not come under 9 subsection 4 because it is already covered under 9 subsection 3. So therefore on this FSI 5 lakhs, TDR, FSI and long term lease, on that 5 lakhs anyhow we need to pay 18% under RCM, but this is not under section 9.4, this is under section 9.3. So that anyhow we will pay. So therefore these two don't take it into account. And then you see remaining inward supplies. In that if capital goods are there, yes, capital goods is there. So with respect to this capital goods, what you need to do? So check whether it is from a registered person or unregistered person. So it is from an unregistered person. So therefore you need to pay GST under RCM on capital goods. That is step number 1. So what is that? 40 lakhs into 12%, 4,80,000 is the first GST that you will pay under RCM. So that is step number 1. Okay. So 4,80,000. So have a look into the steps that is involved. So step 1, capital goods, GST payable under RCM, 40 lakhs into 12%, 4,80,000. Now the next step is take the remaining inward supplies. So what is the value of the remaining inward supplies you see? So that you will know what is the total inward supplies, that is inputs and input service, you need to do computation together. So see the total inward supplies, that is inputs and input services for this financial year. So that is 10 plus 15 plus 20 plus 15 plus 10. So up to this it is 70, and then 5 plus 10 plus 20 plus 15, that is total 120 lakhs is the inputs and input services purchased during the financial year. Out of this 120 lakhs, remember the total is 120 lakhs. how much is purchased from unregistered person? So cement, you need to first check cement. Is cement there in the list? Yes. Is it purchased from unregistered person? Yes. First pay GST on cement at the rate of 28% because it is purchased from an unregistered person. So 15 lakhs into 28%. So 15 lakhs into 28%, 4 lakh 20,000. Already on capital goods we paid 4 lakh 80,000. Now on cement we will be paying 4 lakh 20,000, no doubt, because cement is purchased from an unregistered person. So now apart from cement, because already cement you paid GST under RCM at the rate of 28. Apart from cement, you see the remaining goods which are purchased from remaining goods and service which are from an unregistered person. So what is that? 10 lakhs plus 10 lakhs plus. This is from a registered person. That is the first case. So only 10 lakhs. So 10 divided by 120 is how much? 10 divided by 120 is 8.33, which means more than 80%. So whenever you pay GST under RCM on cement also, that is counted towards purchase from a registered person only. So therefore you have achieved more than 80%. So in the remaining goods we don't have any cement and all. So therefore we don't have to pay any GST and RCM on the 10 lakh rupees. Okay. So this is the answer for the first part. So what is it I have done? Value of above 120, GST payable under RCM with respect to cement 15 lakhs into 28%, 4 lakh 20,000, and inward supply from unregistered person other than cement is 10 lakhs. So 10 divided by 120 is 8.33, that does not exceed 20. So therefore no need to pay GST under RCM on the 10 lakh rupees. Okay. So now if you see the total GST payable, first on capital under RCM 9 subsection 4, on capital goods 4 lakh 80,000, on these inputs and input services 4 lakh 20,000. So total 9 lakhs plus 9.3. 9.3 is what? FSI. So on that FSI we are paying 90,000. So therefore this is the answer. This is how you need to arrive at the answer. Then suppose if they have given in the question that manpower supply service is from an unregistered person. So what if this manpower supply service is from an unregistered person? So I want you to try the answer. So I'll give you time. What I need is how much GST I need to pay under section 9 subsection 4 I need. Okay. How much GST I need to pay under section 9 subsection 4 I need. So this is the question for you. How much GST I need to pay under section 9 subsection 4. 9 subsection 3 already I know. So that is 10 lakhs into 18%. Okay. But 9 subsection 4 you tell me. Six lakhs into 18%. No, what I need is the final answer. How much I need to pay GST under RCM under 9 subsection 4. So first 5,28,000. Okay. Any other answer? No? Okay, 10 lakh 8,000. Vibha and Ashrumati, correct, perfect. So it is 10 lakh 8,000. So why 10 lakh 8,000? See, because first of all, if you see, so 10 lakhs, okay, and one more 20 lakhs, 30 lakhs is now purchased from unregistered person. See, capital goods, no doubt. Capital goods, no doubt, that is 4 lakh 80,000. Then cement also, no doubt, 4 lakh 20, that is there, already there, 9 lakhs already there. Now 30 lakhs is purchases from an unregistered person. How 30 lakhs? 10 lakhs plus 20 lakhs. So together is 30 lakhs. So 30 divided by 120. 30 divided by 120 is 25%. But how much is allowed? Only 20% is allowed. Extra 5% is there. So 120 lakhs into 5% is what? 6 lakhs. So on that 6 lakhs, you need to pay GST at what rate? Don't see which product it is. 18% flat. Don't see which rate it is. So there are multiple rates, but you don't have to see which rate it is. So flat 18%. So 1 lakh 8,000. Already you are paying 9 lakhs plus extra 1 lakh 8,000 you need to pay for that 5%, because only 20% you can from an unregistered person, but here it is 25%. So the extra 5% you need to pay GST under RCM due to that reason. Okay, so therefore step 1 will be same, step 2 also will be same, and step 2 alone, one more change is that inward supply from unregistered person other than cement, because cement already you paid GST under RCM is 30. So 30 divided by 120, 25 greater than 20, only 5% is disallowed. So for which you need to pay GST under RCM. What is that? 5% of 120, 6 lakh. 6 lakh into 18%, 1 lakh 8,000. So 9 lakh plus 1 lakh 8,000, 10 lakh 8,000. And anyhow 9.3 we need to pay GST under RCM. Okay. So this is the answer. Okay. So therefore now you would have understood as to how to arrive at the answer with respect to 9 subsection 4. Okay, if at all you get a question. I was expecting that question but it did not come yet, but maybe there is a possibility to coin a question like this. Okay. Sir, can you once tell about the presentation part of RCM in 14 marks question you were saying? That is, whenever our outward supplies are covered under RCM, so first we need to see the transaction, whether it is supply or not a supply, and then whether it is taxable or exempted we need to check. Once it is taxable, you need to run through whether it comes under FCM or RCM. If it comes under RCM, then liability to pay GST is on the recipient, so don't count it for the taxability of the supplier. So in the supplier's taxability, while you arrive at the tax liability of the supplier, don't count it because it comes under the RCM. Same way, purchases also, inward supplies also, when it is covered under RCM, you count it into the tax liability of the recipient. So for that it will be useful. This RCM calculate, like whether it is covered under FCM or RCM is mainly useful for that purpose. That's what I was referring to. So any doubt in section 9 subsection 4 which we have completed? 9.3 we completed, notified services, and 9.4 also we have completed, that is inward supply of a promoter or builder from an unregistered person. And now we are moving on to 9.5. Whether you have any doubts related to 9.4? So got the confidence as to how a question can come and how you need to tackle that? Okay. Yes. Fine. So I am assuming that when you are not replying, which means that you understood. So I can assume in that way and I can proceed now. Okay. So section 9 subsection 5. Liability to pay GST on e-commerce operator with respect to some notified services. There are 3 notified services: HAT, housekeeping service, accommodation service, and transportation of passenger service. So these 3 services are provided through an e-commerce operator. First of all, who is an e-commerce operator? So e-commerce operator is a person who owns a website or a mobile application, and they will be connecting the supplier and the recipient through their platform. So they will be called as a e-commerce operator. When a supplier is making their own supplies through their own e-commerce platform, that will not be called as supplies through an e-commerce operator. So in case of supplies through an e-commerce operator, 3 notified service: liability to pay GST on the entire transaction, not just on the commission received by the e-commerce operator, on the entire transaction lies with the e-commerce operator. And what are those 3 notified service? Housekeeping services, so like Quicker or Urban Clap, etc. So then accommodation services, so Oyo, Goa, Bibo, etc. And T for transportation of passenger services. So transportation of passengers by what mode? Radio taxi, motor cab, maxi cab, motorcycle. Already I explained to you while discussing the summary. Okay. And there is an update which is for May 22 exam, that is all types of motor vehicles are now covered. So which means transportation of goods or transportation of passengers through any type of motor vehicle, any kind of transportation is now covered under e-commerce operator 9 subsection 5. But at present it is not. So therefore a question may be coined because there is an amendment that may come in future related to this. So therefore they may coin a question. That is, so Red Bus is a e-commerce operator who is providing transportation of passenger service through bus. In that case, whether liability to pay GST is on e-commerce operator or on the supplier. So at present it is on the supplier, that is the bus operator. So he need to pay. Same way, there is a person who is having a lorry. That lorry or a truck, he is giving it to one e-commerce operator for providing the service by way of transportation of goods. In that case, liability to pay GST is an e-commerce operator or on the truck owner. So it is on the truck owner or minivan, like minivan for transportation of goods, etc. So on that person, but it is not on the e-commerce operator, because only transportation of passengers by radio taxi, motor cab, maxi cab and motorcycle is covered under 9 subsection 5. So look out for this area. So definitely it can be tested for the forthcoming exams. Then every time students will be asking me, sir, every 6 months you are like taking the batch, and what is special about it? Okay, what is so special about it? Every time you are doing this, and what if you have already attended? So what will happen is that the emphasis will be changing. So like batch after batch, what will happen? So I will be knowing as to which areas that can be asked. So there I will be putting more emphasis. Okay, so that is the reason. And fine, no issues. And important points: when e-commerce operator is liable to pay GST on above services, they are not required to deduct TCS. So first of all, there is a concept of tax deducted at source, the tax collected at source in GST. So TCS concept is applicable for an e-commerce operator. So whenever they are liable to pay GST with respect to notified services, these 3 notified services, so TCS concept is not applicable in this case. And only in case of notified services, e-commerce operator is liable to pay GST. What about the other cases? So in case of supply of goods or supply of other than notified services through e-commerce operator, who will pay GST? So that supplier only will pay GST, e-commerce operator will not pay GST. Okay. And every e-commerce operator who is liable to pay GST, this section 9 subsection 5, or e-commerce operator who is liable to deduct TCS is compulsorily required to get registered, that we have seen in compulsory registration. And then suppose if supplier is paying GST on the transaction, I am selling goods through e-commerce operator Amazon or Flipkart, then I have to pay GST on that supply. Whereas e-commerce operator will get a commission or delivery charges. On that, e-commerce operator will pay GST, not on the entire transaction. Same way, whenever there is supply of food through e-commerce operator, I am a restaurant, I will pay GST because it is not a notified service. So I will pay GST. Whereas e-commerce operator will pay GST on the delivery charges. So usually through Swiggy, when the goods are being delivered, there will be a delivery partner fee. So on the delivery partner fee, etc. So on that only they will be paying GST, but on commission. So they will be getting some commission for supplying the food through their platform. So on the commission delivery partner fee only they will be paying GST, but not on the entire transaction. On the transaction, that is food, liability to pay GST is on the restaurant. Again, in this place there is an amendment for May 22 exam. So there is some new change that is being done in this case. So due to that reason, again this area can also be tested. That is a restaurant which is supplying food through an e-commerce operator. Then next point is that also every supplier of goods through an e-commerce operator is compulsorily required to get registered, whatever may be the nature of supply. So I am supplying books which are exempted goods. I want to supply goods through an e-commerce operator, books. So even the books are exempted, but I need to register compulsorily, because every supplier of goods, whether taxable or exempted through an e-commerce operator, they need to compulsorily get registered. What about the notified service, supplier of notified service? See, supplier of notified service or supplier of other than notified services, so they will be required to register only when they their aggregate turnover exceed threshold limit. So compulsory registration is not applicable to them. And you have to remember one more important point here is that, see, whenever the supplier is registered, 9 subsection 5, 3 notified services are there, no? That is HAT. So in that case, when the supplier is registered, housekeeping service and accommodation services, supplier only will pay GST because it is no more a notified service for 9 subsection 5 when the supplier is registered. Until the time supplier is registered, it is a notified service. But the day, in case of housekeeping service and accommodation service, supplier gets registered, so it is not a notified service under 9 subsection 5. So then who will pay? Supplier only will pay. Say for example a hotel which is unregistered, listed with GoIBIBO. So who will pay money, like who will pay GST on the money received by the hotel? GoIBIBO will pay GST on the entire transaction, on the entire booking amount. What if that hotel got registered? The day when hotel got registered, it is no more a notified service under 9.5. So the hotel only will pay GST. Then what e-commerce operator GoIBIBO will pay? So whatever commission that they are getting, on that they will pay GST. As simple as that. Whereas in case of last case, that is transportation of passenger service, let the supplier be registered or unregistered. So always liability to pay GST is on the e-commerce operator, Ola, Uber, etc. That is this. So this is about section 9 subsection 5, and section 9 subsection 3 says that liability to pay GST is on the recipient. But there is only one transaction. So in case of that one transaction which is given under IGST Act, so liability to pay GST is neither on supplier nor on recipient, but on some other person. So what is that? So when both supplier of service and recipient of service are located outside India, place of supply for the transaction cannot be determined, because place of supply provisions we have to determine whether it is an intrastate supply or interstate supply only in case when supplier and recipient are in India, or any one in India and the other outside India. When both supplier of service and recipient of service is outside India, place of supply cannot be determined under section 13 or 12. So place of supply cannot be determined. So therefore what IGST law did, that they have exempted all the services, but only one service they have made it taxable. What is that service? Transportation of goods by vessel from where to where? Outside India to India. So they never wanted that service to be exempted, because transportation of goods by vessel from outside India to India, actually smuggling will happen. So they wanted to curtail smuggling. So due to that reason, so they have given exemption in case if you are transporting the goods by airways from outside India to India. So you are an importer, you wanted the goods to be imported to India. If you appoint an aircraft for the purpose of transportation, that aircraft will charge a freight. So that freight is exempted under GST. Suppose the same goods if you are bringing through sea freight, that is ocean freight, so you pay to the shipping company, that freight will be taxable always. So even if the supplier of service, who is the supplier of service there? The shipping company located outside India. Who is the recipient of service? The recipient of service is the exporter of the goods, who will be receiving the service of a shipping company which is located outside India. So there will be taxability, but neither supplier, shipping company, nor the recipient, exporter of that goods will pay GST. But the importer of goods, who is no way connected to this transaction as supplier or recipient, will be paying GST on that freight component. Okay. So this is an exception to section 9 subsection 3. That is this note. Okay. So with this, liability to pay GST is over. So any doubt in this 9 subsection 5? 9 subsection 5 and this exception. And you know what? Because of this exception, in case of ocean freight, there is a double taxation. Because at the time when we do the computation related to customs duty, so we take IGST payable, and when we do IGST payable, and we will be including freight also as part of assessable value under customs. So assessable value under customs includes, so even freight, because CIF price we will take in case of assessable value under customs. So that CIF will have cost, insurance, freight. So therefore this ocean freight will come in that CIF. So again you will be paying IGST on the assessable value including the freight. So there will be a double taxation in case of this freight, and we can't do anything with respect to that. So that's how it is given in the law.